What's up, guys? Welcome back to the channel. So today is episode 107, and today is going to be a follow up on my previous video, which is how to buy the dip using the charts. And this was covered in episode 104. So if you didn't watch that video, go back and watch that video and then come back to this one, because this is an actual follow up in terms of the charting. So the video series is pretty much focused on trading QQQ or SPY, any one of these ETFs. So pretty much I showed you guys in a video last week after, the CPI data came out, the stocks had a huge run up. All right. So that was Wednesday. It ran up really crazy, ran up Thursday. And then Friday, you had a little bit of run and then it just started to slide. Well, it's two things that happen. You have to remember, whenever there's a great run, people are going to start taking profits. All right. And whenever they take profits, the stock is going to go down. So people have, their options or their stocks and they're selling, the asset price is going to go down. All right. So whenever there's a tremendous run, one day expect the stock to pull back at some point, even during the same day. So if you've had, let's say it's on a crazy run from, say, like market open at 9:30 all the way up until like 2:30, you want to get out, man. You want to get out before 3 o'clock, because that's when people are going to be like, it's maxing out. So let's go ahead and get out now. I'm going to take my profits. And that's the smart thing. You don't know what's going to happen overnight. So if you want to play things safe, you would go ahead and just take your earnings early. All right. So that's pretty much what's going on here. So we're going to hop into the chart and take a look at exactly what went on yesterday, which was Monday when the market opened. So that video was Friday, and I pretty much just went over the details of how the stock was dipping and where I would enter. All right. So let's go ahead and take a look at it now. All right, so we do have QQQ pulled up in the charts right here. So this was where it was at, fell all the way down to this level, right? And this was on Friday. It was at somewhere around, like, say, 450. All right, now let's zoom in here, and market opens up. And as you guys can see, I was going through yesterday and just labeling the areas for you. But as you guys could see, we have a gap up. So from here to here, there was a gap. All right. Which means that at some point, the stock plans to come back down and fill this gap at some point. Now, pay attention here. Market opens up and look at this. Just massive Hulk candles. Like I told you guys, if you had bought in, say around here on this dip, right? Because as you see, it was touching this line a couple of times. So this is pretty much a touch, but this is definitely a touch here and a touch here. So let's say you realize this was support and you had bought your calls here, right? Let's say you bet that it was going to go back to, because what are we at here? We're at like 451. So let's say you bought like a 450 call. All right. The 450 is really down here, but let's say you bought a 450 call on Friday. Those calls expiring, say, like Tuesday or Wednesday, they were about $60, and it had a nice delta. You'd have made so much money, because look, here comes the run up. Then when the market opened yesterday, the gap up, and look at that Hulk candle, 2, 3, 4, 5, 6, right? Smashes into an entire new zone. So it hits this level, hits the 452 level, smashes through it. Boom, rah, just punches through the wall. Hits this next level, right, which is the 453 level, smashes through, then we get a David Banner candle right here. All right. Now, let's say you got in here. Let's say you got 10 contracts. After this massive run here, I would start shaving positions. All right. And I talk about that in my risk management video, which is episode 98. Go ahead and check that if you didn't watch it. But you have this David Banner candle now, comes in, so it respects the 453 level for a little bit, comes back down, boom, 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 goes up, touches the same 453 level again, and we have more David Banner candles. Then it comes down, and this was the retest, support, boom, bam, 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 smashes 453, smashes 454. Look at this, just goes crazy, right? Respects the 52-week high. So it gets up to the 54.60 something, right? 61.65, somewhere around there was a 52. And we spoke about this. It respected it the last time, and that's what created this massive slide on Friday. So it respects the level, and what does it do? When it respects the level, it starts to consolidate. And guys, you always want to watch for consolidation, because consolidation usually means that there's a big movement coming soon. So boom, 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 it's just consolidate, respect. All right. We had a little break and a retest, right? See, right here. So let's move this over. This is the break and a retest. So breaks out, comes back down, another one. Boom, then it comes back down, heading back down to this 453 level. Gets to this level, and as it says here, guys, breaks and consolidates. So let's scroll over. And it just starts to go, I would say, within the median between the 453 and 454. Breaks above the level again, comes back down. Boom, 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 boom. Right? And just keeps going, consolidating. And then here comes the confirmed breakout. All right. So goes here. All right. And the confirmation is this massive candle, right? Like a Marabuzu candle. Then we have a second one and a third one, and then it runs. So I would play it all the way up to here and then get out. That's me. Or leave something else, like leave a runner. And boom, 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 respects this new level now, which is the 455 level, right? And then comes back down, a couple David Banner candles, breaks through the 455 and goes up to, what is this? The 455.64 level. And it's respecting that level, and this is where we're at today. All right, so just came down. All this consolidation that you see here, guys, this is the lunchtime. All right. Boom, 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 boom. So when the market closed, this is where it was at. All right. QQQ was at 454.97. So pretty much what I'm saying to you guys, if you had bought the dip, right? Let's say you had gotten somewhere around here. You see the kind of money you would have made? You're talking a 450 call and it goes to 455 and beyond. That's massive, massive gains. And the only way to know this, guys, is to study these charts. Draw your lines, set your levels, and watch and see how the stock plays out. Watch how it respects the level. Watch the consolidation. Just look at the areas. Learn to see how the breakouts go, because you'll usually have one big breakup. Then the consolidation lasts for a time, but when it's consolidating, just sit tight. Don't buy anything. Just sit tight. You're waiting for confirmation, either to the up or the downside. And then why these stocks are so easy, if you look at, say, the top tech stocks for QQQ, you're looking at, Nvidia, Google, Microsoft, Apple. If those stocks are all trending up, it's going to go up eventually. So you just want to sit tight. Don't buy when in consolidation, or don't buy without having some idea of where the market's going. Now, is this 100%? No, it's not. No, it's not. It could fail. It's not fail proof. But historically, the charts are pretty accurate. I know people that buy options that don't use charts. They just go to Robinhood. Oh, this looks good. Boop, 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 swoop. And they buy options, and sometimes they win. But when you do it that way, you're going to have probably a 40 or 50% win rate, which eventually you're going to get wiped out. You're going to get wiped out. All it takes is for you to get cocky and make a big purchase, and boom, it's gone. So using the charts, using these historical patterns, seeing the levels that it's respecting in terms of resistance, and seeing the levels that it's coming back down to in terms of support, you buy your calls at support, you buy your puts at resistance. All right. So this was just a follow-up, like I said, on episode 104, how to buy the dip using the charts. I hope you found this information useful. If you did, go ahead and Consider subscribing. I make new videos like this every day. Please go ahead and also like this video and share it with a family member or a friend. Thanks again for watching the video, guys. I really do appreciate it. Y'all stay safe and have a blessed day. Peace.